The 2019 Future Banking Tech West Africa Conference featured a panel session that discussed the dynamics in the digital financial services landscape in West Africa.
When it comes to technology, our participation in technology has increased and deepened over a period. And, informal information at Silicon Valley, most investors externally probably will have done more than $200 million, especially in this country when it comes to fintech. So, and the industry is growing, and they're growing as strong as possible. So that growth is key. There are about 55 hubs, technology hubs currently in Nigeria, and those technology hubs are waxing very strong. And definitely that actually puts a position where if we're going to become a Silicon Valley within West Africa, Nigeria is likely going to be the country that would have that level of dominance.
Nigeria has the numbers, hands down. Nigeria has been ahead most of the time. There's a slump. But what I've seen happen in the last 4 years in Nigeria has been a loss of focus. Suddenly, the focus has not been there. It either went dead, or some of the changes that came as a result of regime change, stifled everything and made everything dormant for a long while, because nobody could even invest in technology anymore in this country because they couldn't take their money out. So everything basically stopped. But I think that, yes, Nigeria has always been in the lead.
When you come to inclusion, and if you've been looking at the EFINA figures, there is a category that even requires more effort, and that's women. If you look at access that women have to financial services, it is quite low. And a lot of non-for-profit organizations are looking in that direction. It may be an opportunity for banks to also create solutions that fit their purpose, that they can get easily because they are disadvantaged in the current economy. Now, on the issue of who wins this war, I think the market is going to determine that, and I think very quickly you can see that the Nigerian market is already commanding the investments that are going to enable it to be the winner in future.
Some of the panelists give their perspectives on driving digital financial services to deepen financial inclusion in West Africa.
When you have a situation with partnerships and innovation like is starting today, if you go ahead with a tight regulation that is not totally understanding of the intricacies of that type of business, you may stifle it. And that's why the proposal here is to have a type of regulation that looks inward into the business that is being done, so that what is being offered is guidance that helps to stabilize the market, establish and build the right trust. Because there's a trust today. What we have working today is because there's a trust that has been established. And I think that level of trust needs to continue into the next regime. However, with a bit of understanding of this type of business, because we're going to have a situation where a lot of non-banks come into the ecosystem, where technology companies are now coming into the ecosystems with solutions that are not necessarily process-oriented as the banking, process or batch-oriented as the banking industry has been. So it will take a lot of understanding on the regulator side, is really what I'm saying, and a lot of work with the banks, because at the end of the day, the fintech companies and innovators are going to co-innovate with the banks. A lot of people talk about collaboration, competition, cooperation, whatever name is called. I don't see anybody succeeding in this industry without working with a bank or working with an institution that has the size, the assets, the license, and even the experience of a bank.
The actual fact is that it depends on the participation. So for this PSB to work, the participants need to be strong enough to deepen financial inclusion. Well, it's a lot of investment considering the capitalization that is required for the PSB. So I believe, based on the level of investment that is required, they would deepen financial inclusion, because you're also looking at the numbers of PSBs that will come out. They would actually be the ones to push to do that. But before this makes sense, before this actually gives us what we're looking for in terms of financial inclusion, there are a couple of things that need to happen. We need to simplify the onboarding process. We need to encourage financial literacy as much as possible. And the products that are run by the PSBs need to mirror reality rather than mirror it from a product point of view. They need to follow the customer. They need to follow the prevalent patterns of the customer, of that sector, of the informal sector. If they do that, they would deepen financial inclusion. Again, they would also need to follow the way things happen. So customers, for instance, they need to offer something. There has to be something on the table, like credit. They need to find a way to take credit to the informal sector. We understand the skepticism, but it's important to deepen financial inclusion, and we definitely get the benefits out of the participation of the PSBs and financial inclusion.
Financial inclusion, if it's going to ride on technology, requires that the national infrastructure backbone for telecommunication is present, is good, is supportable, and is sustainable, and it's also cost effective for everybody. There is no point building the infrastructure without people not being able to afford it. Okay, so first to get to that point, and then the government has to give the incentives. Okay, the government may not have to take direct cash to invest in it, but they can give people who have the ability to deploy the infrastructure certain tax credits, like they give foreign investors who come in. Give it to the local people, enable them, and give them very good, very good loans, with very low interest rates. But however, ensure that they deliver. Just enabling people and they're not delivering, I think is a difficult thing for me to swallow. However, if the government enables, they should monitor, control, and ensure that there's delivery.
There have been a lot of study from sociologists on the need to deepen rural banking in West Africa. How can this be keyed into financial inclusion using technology? You just heard someone talk about the challenge of mobile money and even agent network. How can we rework this?
Again, we come back to the question of infrastructure. If the telecommunication network was pretty good, would you need a rural bank? You would not, because it is irrelevant where the bank is located. The bank could be located anywhere in Nigeria. However, because they have good telecommunication network and they are assured that their transactions will go in and out, and they trust that their voice would work, and they trust that there will be customer support if they have a problem, then the need for a brick and mortar rural bank goes away. But until we can do that, the question now is how many people are ready to move back to the rural communities with the expertise to work in a rural bank. So it's not an easy challenge, it's a difficult challenge. However, I believe personally that if the telcos are really enabled and are given the chance to expand their telecom network across the country, this issue would be resolved through digital banking.
From the discourse today, it is clear that Nigeria's quest to attain 80% adult financial inclusion by 2020 will require an effective regulatory environment, robust telecommunication infrastructure, and collaboration between banks and fintechs.